yard is like a hotel and it's only making money when the rooms are full. Good afternoon, everybody, and welcome to the Comstock channel. I'm Zach Hooker. Today we're going to talk strictly about this red-hot cattle market and some things to keep in mind as we get further into the fall. Now, it goes without saying, but this cattle market is absolutely nuts, which is leaving many in the industry wondering how sustainable this run is. The short answer is I don't know. Multiple times throughout this bull run, there's been a consensus that the high is in, and yet here we are making new all-time highs daily with $4 feeder cattle within reach. So let's take a look at the current price levels to kind of get our bearings a little bit. Now, I'm recording this after the close on October 14th. So here are the front month futures prices, the real-time index, cash cattle prices, and box beef. I probably should have blocked off part of this to focus in on where prices are today, but that's not news to anyone. So here they are. Let's see. Today, October feeders closed at 380.17. Feeder cattle, the real-time index was 374.27. Live cattle futures closed 241.82. And then live cattle cash 234.07. Choice boxes 364.42. And select boxes 350.55. Now, in addition to today's values, I went back 90 days to July 15th and then another 90 days to April 15th to compare prices as well as the change over that time. Now, clearly, we know there's been some outside influences on this market in the form of the closure of the U.S.-Mexico border and tariffs on Brazil. Both of these things have been rocket fuel for this cattle market. But all of that aside, just looking at the numbers, we've seen a $60 move in feeder cattle over just 90 days, which is double what feeders moved in the prior 90 days. Just incredible. Live cattle have increased as well, but not nearly at the same rate. Then as we look further down this table at the cash cattle prices and box beef prices, we start to see some red. Now, I've highlighted this several times of late, and I may be sounding like a broken record, but to me, this discrepancy between cattle prices and box beef prices simply isn't sustainable. I mean, if the live animal is worth X amount of dollars and the product is worth significantly less, the packers are losing money, and I don't believe that they're going to let that happen for long. But box beef prices are stagnant, and then on the other end of the chain, feeder cattle prices continue to rise. If we look at the difference in live cattle prices from midsummer to now, we've actually lost a little bit of ground in the cash arena. And obviously, this is an issue that many cattle feeders are facing. Thankfully, corn is cheap right now, but there's a lot of money on the line, and we get calls daily asking, what should we be doing here? Now, this really comes down to each individual operation, but the bottom line is protect yourself, and if it doesn't pencil, don't do it. We've all heard the saying that a feed yard is like a hotel, and it's only making money when the rooms are full. The exception to this is that, unlike a hotel, a pen of cattle isn't guaranteed to make money. And the only thing worse than an empty pen is a pen full of cattle that are losing money. So feedstuffs is going to be a big thing here. Take advantage of these low corn prices and hedge your feed. It seems like a no-brainer, but it's easy to take cheap feed for granted. As far as buying cattle goes, again, that's going to be different for every producer. If your goal is to minimize death loss, then maybe buying those top-end calves is what you need to do. But for many feeders, the opposite is going to be true. Many are going to get priced out of those high-end calves going for close to $4, and they may need to get creative. Whether that means buying smaller calves or dairy cross calves instead of a traditional British breed or some straight off the cow, high prices like this are going to force producers to stray from their normal. Again, that looks different for everybody, but the bottom line is run your break-evens and know what you can afford. Don't let emotion get the best of you in the barns. Now, that being said, once you get some cattle bought, get them protected. I know this is unprecedented territory, and there are a lot of folks out there with margin fatigue. I mean, I get it. But my fear is that many producers are going to either feel jaded from having lost money on their hedges through this bull run, or are going to feel bulletproof and potentially leave themselves unprotected when this market does turn. I think that's where it's really valuable to remember that, there's a difference between trading and risk management, right? If you are losing money on your hedges, you are gaining money on the hoof. And so that's not a bad thing. Now, obviously, like I said, unprecedented territory here, and we've seen a lot of money change hands, and that can be frustrating. But, there are other options out there. So if straight hedges aren't what you want to do, get in touch with your broker to learn about LRP or other strategies available. I realize that sounds like a sales pitch coming from a broker, and it sounds like someone just wanting to generate orders, but I can assure you that's not the case. At the end of the day, orders really stop coming in when somebody loses the farm because they didn't manage their price risk. So my main goal is to help keep you in production. We may trade a couple of home runs for base hits, but when given the option between that or grand slam followed by immediate forced retirement, I'll take the base hits all day long. That's all I've got for today. On behalf of everyone at Comstock Investments, thank you for watching. I'm Zach Hooker, and I'll see you next time on the Comstock channel.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.